Good morning, everybody. Welcome to the Flow Show. We're into the final furlong of the year, the last month of the year. We've got loads of central banks to come. Probably get about 3 weeks worth of trading, and then it's Christmas. So enjoy it while it lasts. Don't try and make your year in the last month because things can get a bit funky. Morning, Kay. How you doing, mate?
Good morning, Ryan. Good morning, everybody. Yep, as you say, funky month is here, but we're ready for it, aren't we?
We're always ready for it. Always ready for what the market's going to throw at us. Very much so. Right, let's get cracking. What's been happening Friday and over the weekend? The PBOC have brought their fixing rate down into the 718s from 719s. That's even while we've seen a bit of a jump up in one pairs today. A little bit dollar bid going on, yield bounce, some other bits and pieces going on as well. We've also got a bit of data out of China. PMI's data, it's some finals for some and new for others. Manufacturing PMI, we had a couple of bits out, improving to 50.3 from 50.2. Also, the services number 50, a little bit backwards, but still holding in positive territory. Now, this one is the official Chinese number. We also had the Kaijin, the private number, if you like. That came in at 51.5 for manufacturing, so better improvement in that one. We're hearing a bit more about front loading. Exporters in China, Canada, and Mexico are looking to front load shipments to the US on the possible threat of tariffs from Trump when he gets in. There's a logistics centre in China that's apparently been inundated with calls from importers, i.e. those in other countries, wanting to get shipments expedited as quick as possible so they receive them before these potential tariffs come in. So we can probably expect Chinese data on the trade balance front to probably start reflecting that over the months ahead when if that front running is seen through there. Over in Japan, we've had a bit of hawkishness from Mr. Ueda. He said the economy is on track to meet our forecast, speaking to the Nikkei, which pretty much is looking like it might be sealing a deal for a December hike. He says we will adjust the degree of monetary easing at the appropriate time if we become confident. He said a weak yen is a possible risk once we reach 2% inflation. But it can't be Mr. Ueda about throwing in some cautionary comments. He said they wanted to scrutinise developments in the US economy as there was a big question mark on its outlook. So sounds like all guns blazing for December, but obviously chucking in a few caveats along the way. Is that December now Donkey?
Well, yeah, I think they will go. It's been my opinion for a while now, and that hasn't changed after Ueda's repeated comments. Yeah, I mean they're always going to be cautious because they don't want to have nor an August repeat because that was a bit too violent, nor one thing that the market dismisses all ideas about hikes, and then it remains to be seen how much they will hike by. If the market thinks they are going to raise a quarter, that may be perhaps a bit optimistic right now. I'd say it's going to be anything between 15 BPs and 25 BPs. But yeah, they don't want the JGB market to implode either because they still have the government still has a lot of stimulus to fund, so they will want to go on a gradual basis, and I think that's why he always talks with two words, and there's always a bit of a but in there. But yeah, I think they will go. Yeah.
Yeah, I think we're heading for it as well. I think that is the question: how big do they go? Will it be a 10? Will it be a 15? Will it be a 20? Will it be a 25?
Yeah.
Because that's something that the market will react on,
Hmm.
depending on the size of it. If they go for a bigger one, then that suggests they're stepping up a bit, which is obviously far more hawkish.
25 would be seen as a bit of a hawkish signal, right? Unless he announces a post then. That's always uh, the 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 last bit of a tail risk to if they announce a pause at 0.5%, which is possible, but I don't think they will want to announce a pause right now, at least not in real precise terms. So yeah, could be that we're in for anything between the 15 and the 25. Yeah.
Yeah, I think the only signal for a pause would be if they say, right, well, we're hiking now, but we want to see next year's wages data.
Well, that's a
Um,
possibility.
yeah,
It
and
is a
then that's
possibility because there's so much emphasis on all those wage data that it is a possibility.
yeah,
Get a move well below 2% and holding below 2% on the CPI and economic data which are not overly supportive. The companies they may not be in for another 5% wage hike.
yeah, exactly. So yeah, it'd be unusual for them to be that specific, but
No, I
that's
don't
we
think
know
so.
that's what they're looking at. It's all part and parcel of wages and the economy growing and whatever. So we know what their conditions are for hiking anyway. So we shall see. We've got a couple of weeks to go yet before we get to that decision. Back to some of the data, and we've had some capex spending data for Q3 coming out, which looks a healthy 8.1% in Japan. So, they've been talking about this virtuous economic cycle, and well, investment is part and parcel of that. So that's looking good on the data front. Now, we also have had a story out about the Japanese government going to allow the big pension fund, the GPIF, to increase its yield target to 1.9 percentage points above wage growth. That's from the current 1.7 percentage points. Now, why this is important is because it's the government that allows the pension firm, not how much it can make, but how much it can invest, and allocations and that sort of thing. Now, this is a review that happens every 5 years, and the GPIF is also going to have its own 5 year strategy review, which will be done by the end of March. Now, the last time there was a big, oh, hang on, sorry, that was all going. The last time that they made any real big changes was back in 2014, and they did start investing a lot more into Japanese equities, overseas equities. So it can be a bit of a game changer because these guys, if they start moving, they move markets. Okay, now usually it's all done in bits and pieces and whatever. But again, this is all part and parcel of what's going on in Japan, in getting these big pension firms and the big whales, as we call them, moving in the markets. When might we see any effects of that? Okay, early part of next year as they.
Yeah, I think in the new fiscal year, start in April. I think that's when they usually do any major changes to investment plans. They've already had increased their allocation via external funds as well. It's BlackRock back back in the frame. They really handle a lot of everybody's money. So they are one of the mandated fund managers to handle some of the foreign investments for all the Japanese whales and especially GPIF. Yeah, so it's likely going to the change would likely operate in April, but you can put a lot of targets on revenues and things because we have to understand that with the aging population in Japan, the pension funds need to just produce more money. Otherwise, in the far away for us, but on the big scale of things, not that far away, but they may run out of money to pay the pensions. So they want to up the yield target, but is it realistic? That's the other question. Imagine that you have a bad year on equity markets. Where's your yield?
Yeah, exactly. But then you're getting much higher yields in foreign
Yeah,
sovereign bonds and the like. So it does sort of make up on one side what you might lose on the other side. At least you can get sort of steady returns in that. But yeah, it's they've been hiking wages, so that means people getting paid more. That means people putting more money in the pension pot, which means that money needs to be put to work. So again, it's just part of the cycle that's going on over there at the moment. Right, coming into some of the other data, we're getting a few of the PMIs, PMI finals coming in as well. We had a bit of data out of Australia, retail sales coming in at 0.6% on the month, beating expectations of 0.4%. So that was good. Then we got Japan's PMI coming in at 49 as expected and down from last month. Australia as well, we had their final number coming in at where was it, 49.4, I think it was. It's in there somewhere. I've got number blindness already. Oh, there it is up the top there, 49.4, so unchanged over last month. Might as well go through the PMIs while we're here. From Europe, Spain had been doing fairly well, but saw a bit of a pullback to 53.1 from 53.9 expected. So a bit more of a loss than was forecast, but still in positive territory there. Italy as well, going backwards, 44.5, going worse than expected. France, and these are the finals, no shock there, a little bit worse for that. Germany as well, a little bit worse. Bit of an improvement in Italy, the unemployment rate, 5.8%. Then we come into the Eurozone as a whole, unchanged on the flash number, just confirming that loss. UK as well, final number, a bit softer, 48 versus 48.6. So we're seeing manufacturing still staying in that slump. We had Bank of England's Bailey waffling on last week. As mentioned, it was talking about the financial stability report, so nothing really to do with monetary policy in the near term. But he said when he was asked about the budget that we are not seeing signs of higher corporate stress caused by the budget, talking about NIC, tax rises and that sort of thing, and other effects, but we will watch for how effects of the budget pass through. That overall, he was happy with the budget as it was announced previously, so no surprise, they're not seeing any stress there. We've had one of the big ECB hawks coming out pretty dovish. ECB's Kazakh says rate cuts are to continue starting with December and that they're likely to discuss a bigger December cut, but uncertainty is high. ECB's Nagel says that the inflation uptick was expected and that 2% target for inflation is in sight. ECB's Vilroy saying we will probably be able to continue to lower rates and that he is among those calling for another rate cut. ECB Stornoas says it looks like rates will be cut again in December. ECB's De Guindos came out with this comment. He said nobody in the ECB Council knows what will happen in December, even though we've heard, as just repeated, what half of them are going to be asking for anyway. He said that the acceleration in inflation was expected, but that inflation is going quite well overall and the data is positive. But the news on the economy is less good. It says uncertainties remain over services inflation. JP Morgan is now expecting a 50 pip cut in DEC. They previously saw that cut coming in January, so we get the Bank forecast shifting around once more. However, we're not pricing too far into a 50 pip cut. It's around 20% chance of that 50 basis point cut. So the wider market not really expecting a 50. Kay, we're having more people talking a little bit more dovishly. Is that raising expectations for a cut? Is it changing your mind on a 25 or 50?
Or the ECB?
Yeah.
No, I'm still in the 50 in the 25 camp base case. That's where I am still now because of psychological considerations as well. Well, of course, we can all be wrong, but no, to me, we're still in the 25 camp. But does it change much for markets? Perhaps on the day itself, but I would not. I would argue it doesn't change too much. They are still on the cutting cycle. Apart from the Bank of Japan, and I'm looking at all those expectations. We may be like calling December the 25 BPs month. They all may do 25, but yeah, that's sort of where I am at right now. But yeah, ECB doesn't really change. They've been talking or changing views, or yeah, but I think all in all, I mean, yeah, if you look at France now as well, of course, there's always a very solid argument to make for the 50, but is psychology going to win over the reality of the economic situations? I think it is very possible.
Yes, I think it's looking like we're heading to a meeting or a moment where rather than the ECB members talking about the Eurozone as a whole, they're all going to be talking their own book. So Villeroy in France, their economy's, much lower. Germany, that's Nagel and Schnabel, even though she's not been really dovish, they are economies that could probably demand rate cuts or bigger rate cuts than others. On the other side, you've got countries like Spain who aren't doing as bad. So it's rather than all these members talking about the Eurozone as a whole, I think we're getting into the bum fights where they're looking after their own back and their own countries more so than the Eurozone as a whole. I think that's going to be what's going to drive discussion at the next few meetings, shall we say. What do you think of that?
Yeah. Well, I don't really have a firm opinion about that. Yeah, the thing is, they can all have different opinions because they talk for their country, but at the end, you have to look at the Eurozone as a whole, right? And the Eurozone as a whole is probably not really needing or not that bad enough that it requires 50. And let's face it as well. I mean, the ECB is not supposed to react to French politics, right?
Yeah,
But knowing that Villeroy and Lagarde are both very prominent figures on both sides of the fence, yeah, they may put some more emphasis on it.
Yeah, exactly. And on that front, just in case you don't know what's going on in France, politics are blowing up there again. There's potentially a no confidence motion going ahead. This is all about the budget stuff going on. Budgets are being proposed and they're being denied by some of the parties. The National Rally Party. Well, their party president, Bardella, said we'll likely pass a no confidence motion against the government unless there is a last minute miracle. So that's something that is also weighing on the euro this morning. Right, over to the US. They may have been shut market-wise and quiet market-wise last week, but apparently they were all out spending instead. Adobe Analytics, they bring out online spending numbers pretty fast after Thanksgiving and Black Friday. Consumers for Thanksgiving spent a record 6.1 billion online. That's up 8.8% year on year. They also apparently spent 10.8 billion on Black Friday sales, which is a rise of 9.9% year on year. They say Cyber Monday will still remain the biggest shopping day of the year, with spending around 13 billion, which would be up some 6% year on year. Now, there's two things you can take for this. One, obviously, increased spending shows that consumers still have money to burn or to spend. It does suggest that maybe they did hold off spending in October to make all their purchases in November. We'll have to see that from the main retail sales data, which we won't get till later on this month anyway. Or there's also an impact that obviously prices went up too. So goods obviously with inflation are much higher than they were last year, which could account for some of the rise in how much they spent. Same product, higher price type thing. But overall, it sounds like positive data on the face of it. And it keeps the US consumer going. Now we have to see whether retails dive off a cliff in December, whether everyone did their Christmas shopping in these periods. But it is a funky time. Now we have all these online sales. You've got to take retail sales across both November and December. In the good old days before online shopping and whatnot, you had what November did and then what December did. And usually they were the strongest months, but it changes around in this day and age. Over in Mexico, President Sheinbaum was asked what would happen if there are tariffs on Mexican crude and did they have a plan. She said, yes, they do have a plan if tariffs come on. Didn't elaborate on that plan though, but this is different tariffs now to what we heard about immigration and cars and autos or whatever, talking about tariffs on Mexican crude. Ukraine's Zelensky was speaking to Kyodo News and he said Ukraine has to find diplomatic solutions to retake some of its occupied territories. Now, it's not really new news, but one could take the insinuation from that is that while they're continuing to fight, they might be happy and open to talking about those disputed or occupied territories rather than continue to fight for it, maybe get some sort of deal in place. We've been here before. It's not saying that the end of the war is near, but if we get more and more comments from both sides about looking to sit around the table, then that would be a positive for risk. Obviously, we might be waiting for Mr. Trump to come in January and fix it all within a day. Who knows? Kate, anything else on the news front from you?
There was this bit of S&B Schlegel on the wires, over the weekend, saying that they see that some of the weakness in the economy is spilling over from one of its biggest trade partners, obviously Germany, and that the S&B would do well. He didn't really say what it takes, as in Draghi's comments, but they would do something that if the Swiss franc would continue to strengthen. So that is an interesting one that happened, that commented over the weekend. But I think for the rest, we are you've covered most of what's going around right now.
Yeah, thank you very much, mate. Right, let's have a quick butchers at what's coming up this week, because it's a busy old week to kick December off. Obviously, got non-farms on Friday. That'll be the big data point. But today we've got the ISM manufacturing coming out later. So that'll be the big one. Everyone will be looking at that and the employment component to get their last minute changes in for the NFP. Tomorrow we get JOLTS. Otherwise, it's a fairly quiet day. Wednesday, we get the rest of the services PMI finals from a lot of countries and some first numbers as well. We get ADP, the little NFP appetizer, plus we get the services ISM as well. So that's, again, going to be looked at in terms of juggling numbers for Friday's NFP. On Thursday, we get retail sales from the Eurozone. Challenger job cut reports, and that's potentially going to be an interesting one because, as you know, I've been noting just these increased headlines of job losses here and there. Not huge numbers, 1,000 here, a few hundred there, but they might all be adding up. And obviously, there's the stuff we don't hear about either. So that's been running fairly hot. So we'll see if that is going to come in even hotter, or it's just going to make a mockery of what we've been seeing recently. Obviously, a lot of those job cuts I've been noting have been coming in Europe as well, which obviously is not going to be included in a US report, but we may see similar happening in the US or not. Jobless claims, as always, that won't have an impact on the survey period for the NFP, but we'll still need to know what those numbers are showing us, though they've not shown any wobbles for, well, quite some time now. On Friday, a few little bits and bobs out from the Eurozone, but otherwise it's a double bubble day. We get both Canada job report and the US jobs report as well. So it's going to be a big one. The last jobs report of the year of 2024. So I'll have that competition up and running sometime this week. So you can take part in that. See if you can pick the number and be a winner. Close off 2024 as the champion of the NFP pickers. Kay, you got any? Are you going with your usual this week or this month?
Yeah, I'll go with my usual 111. Yeah.
111. Don't change a winning team. And right, that's it from the data front this week, so you know what's coming. Right, let's have a look what's going on in markets. I think first and foremost, let's have a look at yields, because this is potentially what we need to be looking for at the start of this week. Friday, we had this little break under 420. I've been saying this 420 level is the important one to watch. It was a bit of a late in the day move. US not really at full strength. People taking long weekends after Thanksgiving and whatnot. So not a move that you might think is going to be real. This more so. Now we've opened back above and we're holding back above 420. He's just showing that that move was maybe just a bit of low liquidity end of month, whatever, but not entirely a real move. We're not straying far from this level though, and that's the important thing. We've had a few little pokes under when we've been around here before, so it's to be expected. But if we hold this level now moving forward, then that's going to be supportive of the dollar. As it is, this opening up back above 420 gave the dollar a bit of a boost. If you look at pairs like dollar yen and whatnot, and we've seen a lot of pairs dipping. Euro dollar even got a little bit of a gap in there, but we've opened down and we came down to the 104. Oh, where am I going? Came down to the 105 level. We're holding the 105 level. So that's positive at least, but we're still in this vein of form, Kay, where we can't really bounce. We can't get through this 106. Another go Friday, couldn't get through, but we're not really breaking down at the moment. So this one's still a bit of a coin toss which way it's going.
It is, and this morning it looked as if we were going to break below that 105 and go and have a look at 104.5, but it's still putting in some resistance. But I think it's the market is a bit uncertain about what to do with dollars as well after Friday. But it's still, if you look at it technically, it's still encouraging that we again capped anywhere around that 106 into month end, where we saw the expected twofold move that we saw first of all earlier in the week, some US dollar buying and then dollar selling, and especially from the European front, they had quite a few euros to buy. It seems even into late Friday, but yeah, I still think that it should be those, unless something turns in the dollar, it should be one of those pairs that is relatively capped because of the underperformance of European data, the political mess they're in, France, Germany, and who's supposed to be two of the bigger engines of Europe are still struggling. So yeah, I still think it should be kept around there. If obviously the dollar turns And we are December. I've got a bit of an opinion about what may happen in December. But if the dollar turns, yeah, then we will have the signal. You break 106 figure 10, then it's probably a case that the dollar is going to get sold off for the rest of the month.
Yeah, and I wouldn't be if we do hold down here, maybe another test of 104.50. If we do hold down here, then it might become likely that we're going to see a break of 106 and maybe a bit more of a pullback than we've seen previously. I wouldn't rule that out, but I would want to know the driver. If we're moving that way because US data is getting worse and Eurozone data is getting better, I'm probably not going to fight that. If it's coming because we're just getting into the year-end stuff and closing the books and whatever, then that's going to be a move that I'll look to continue to fade with shorts in this one. So because the fundamentals are still crap in Europe and they're still better in the US. So if I'm seeing a counter trend move in a currency that's not based on those fundamentals changing, I'm going to stick to my guns in my strategy in playing from the short side in this one. But yeah, we've always we say it every year. December can be a funky month. We're probably all right for the next couple of weeks up until the central bank meetings, and then things will then really start. We might really start seeing some influence from year end and whatnot. Dollar China. One thing I didn't mention was news that Trump has taken a shot at the BRICS countries, saying that if they look to replace the dollar, he's going to start lobbing tariffs around again on those. So particularly for China, the tariff threat is lining up. They got tariffs on trade, they got tariffs on immigration, now they got tariffs on replacing the dollar as a reserve currency. How many more tariffs can he throw at China, Kay?
Oh, the thing is, well, it's again, look at what he did when he started to talk about Canada and Mexico. He did succeed to get them around the table, right? And perhaps it's the case as well to really push China to the brink and see what she is doing more than just reply via their commissions or official instances and stuff, but himself talk to Trump, right? So it's still a lot of brinkmanship in there, I'd say. Huh?
When does tariffs become a bit of a blunt weapon? Because all right, if you lob that
If
around now
China,
and again, you get a reaction, but you keep saying tariffs on every
yeah.
single move. When does the market or when do countries go? All right, we're going to call you bluff now. You're saying it too much. You're using the tariff stick too much.
If you see other countries not really moving completely towards China because they don't want to get into that either too much. But when you see other countries saying like, well, okay, I mean, your tariffs are now putting a bit too much pressure on whatever is going on. You're on your own now. That could be the case, and then you will see all of a sudden a turn in the market, I think.
Yeah, very much so. Thanks, mate. Let's have a look at some of the comments going on. Right, well, anyway, just before we look at some of those comments, dollar China, I'm still tempted to start shorting, but I thought we might get a bit of a move through the 728. So I'm going to try and be greedy and maybe see if we get a move up to this 730s before I start putting on some shorts. But again, I'm going to time of the year. I'm going to keep the trade small if I do start to trade against some of these levels because there's still a risk that this could move higher on threats and whatever, and dollar outperformance as well as Chinese weakness. So I'm interested in shorting up at these levels. Not hearing anything from the PBOC just yet, but that lower fix indicates that they do still want to keep the brakes on. So if we get a rapid move up through 730s, that may bring some more forceful comments out from those. So I'm keeping my eye on it, trying to keep calm for this one and not rush too early. Well, I'm not sure what Gordon Gartside's going on about. Okay. Talking about cryptos. Okay. Right. So mentioned euro dollar. Ali, yeah, we're getting a bit of a breakdown in euro sterling. I haven't got in this one. I thought I might have missed a trade Friday. I'm glad this one moved while I was asleep. Otherwise, I might have been looking to pick it up at the figure. So I might have escaped this one, going long in this one. It's looking like it's breaking down. It needs to get below and hold this 82.76. We've had a couple of pokes through. That level goes back quite some way around this area of prior lows around here and a bit further back to 2019. That's why it's a bit of a significant area down here. We are having little probes, but we're not getting and holding below it. So that might be significant. However, if you start to see this 83 figure resisting strongly, then that's going to suggest the break is on and that we might be heading much, much lower. So yeah, you're looking for levels to short, Ali. Well, there's your level, 83. If we can't get back above that, that's your indicator maybe to look at shorts, but you've got to get below and hold below this 82, 75, 76 level for that to happen. Dollar yen's a bit all over the shop. As I said, we had this bounce when yields opened up. That was despite what we saw from UEDA's comments as well, which did kick off last week and whatever, but this move in dollar yen down as well came on that yield move too. So we're back up above the 150. Again, we just can't seem to hold below 150 at the moment. So this one is pretty much mirroring what's going on in yields. Have you got a feeling for dollar yen at the moment, mate? I can't see it being a huge sell with the BOJ hike unless it's a big hike.
No.
Is this one sell rumor by fact if we see it?
Again, sorry, I'm going to have to go back to what happens to the dollar. I think we could have like a two piece or two halves or at least two sets in December. December could be one where we go into the central banks and then the year end, and we could see a completely different picture after into one and then coming out of it. I'm going to say that if the Bank of Japan does like anywhere 15, 20 BPs, we could see a bit of a rally. I do think we are going to find offers before if we get back up to 152, for instance. But I don't see too much of a reason to take it much further than we saw right now. Down around that 149, 40, 50. I have got a bit of a support. So I'd say this one is rather going to be rangy with the potential of some recovery, providing that the dollar is doing all right. And then we'll see afterwards, because I still think that at least the second part, once the central banks are over and done, I still cannot unsee what we had end of last year. And I want to be very cautious on the dollar approach. Yeah, I'm long a few dollars, but mainly against those where I think that for the first part of the month, we should see a bit more demand or selling of the other currency. But for the dollar yen right here and now, I've got very little. Very little that I can see that should happen. As I say, I don't see why we should move a lot lower right now. So I think we may find support below 150 and move gradually back up to 152. So that's about the scenario that I see. But there's also not too much reason to take it much further.
Yeah. Jack, I see your comment about the bid and pardon. Without getting into all the political stuff about that, I did find that quite funny. Now, I haven't heard anything, I haven't seen yet anything from Trump on that. But I think if he doesn't steam into that, he might have done already, I don't know, I haven't caught up. But if he doesn't pick that up, think about what happened with Trump and his court cases that got dropped last week, and maybe whether there was a deal done between them that if his cases get dropped, he'll turn a blind eye to Hunter Biden getting pardoned. I don't know. That's my tinfoil hat theory, and that's where I'll leave it at that. And sorry, Gordon, I see your comment on cryptos is in reply to Ali. Ali, I would say listen to Gordon on that one, because I've got no interest in what's going on in those markets at the moment. So if you want to trade that, there's probably more people better educated than me to answer what's going on in Ripple and whatnot. Mike, you want a quick look at Aussie dollar? Yep, we can have a look at that. Again, this one's looking a bit similar to other dollar pairs like euro, dollar, cable and whatnot, where we've made these lows. We can't quite get to these lows. You know, we had to move late last week, but now we're just holding above. But we're not really turning around the trend. We're not really bouncing. We're finding we're struggling 65, you know, above 65.10 into 65.30s. So it's not out the woods, okay? But you've got a bit more of a range here, 65.30s in this low down here. Now remember, this low again is a weird number, 64.40, but it's a level that has shown up time and time and time and time again, going back and back and back. And when you get these historical levels, you've got to pay them a bit of respect. So what do you do from here? We're in the middle of the range, pretty much. So if you want to be a buyer, you want to try and get in and down here, but be careful, depending on how quick we come down there. And if we get up to the top end of the range, you know, maybe even up to 65.70s, then maybe that's your area to start shorting. But for the moment, the main range is this 65, 30, 40, take into account these little spikes, but we can't hold above this level and this 64.40. So it gives you about 100 pips to play in, but personally, I won't mess around in the middle here. My Aussie Kiwi, that's I'm more interested in because we've had another little break under the 110, but again, we just haven't been able to get below and hold below. But certainly, I think this trade in particular, the Aussie Kiwi, considering we've had this continued move down since the RBNZ, tends to get me thinking that the market now, it knows what the RBNZ is doing. It's going to need something to happen to cause them to be more dovish. We're potentially heading towards the end of their cut cycle. So what happens next? The only other bank that might be for turning is the RBA. But price-wise, as I said last week, I'm not expecting an outright collapse in this one. Maybe a bit of ranging. It'll probably be slow work to get further down. But the upside does look a bit tougher now. It looks like resistance and sellers are coming in more on the rallies than they were previously. So that Aussie trade is looking a bit different from Aussie dollar at the moment. Right, Kay. Let me bang it over to you for a couple. Oh, let me find the right button. Where am I going? There we go. All yours.
Right. First of all, the dollar Swiss that I am in now too, Mr. Ali. So the 88, give and take a few pips last week, did its job on the dollar Swiss, and then helped by Mr. Schlegel, we saw a bit of a rally as well, and also helped with a by the low euro dollar, obviously. Yeah, I think it's good hold, very good hold, even into month end. It was a bit of a risk that we'd trade a bit lower, but it did hold very well. So 88 is really your level. I think if we get below 87.90, there's no reason to be long dollar Swiss anymore. In the meantime, I'm trading it as I usually do. I've bought it on Friday and already been selling a little bits and pieces out this morning. 89, I think around 89. We are seeing 80, 88, 85 to 89.15. That's about where, so call it roughly around 89, up to as I said, 89, 15, 16. That's where the resistance will lie. Got to be a bit careful not to start forming this, which is a possibility because, as I already said, I think there may be part of December pre-central banks and then the post-central banks move. The SNB is expected to cut. Some people also are expecting them to cut up to 50 bps. I don't know if 50 is really justified there either. Or do they want to keep some ammunition for when Mr. Trump will take the seat, or if we see like a bigger drop into the new year or so? Let's not forget they only meet every quarter on the S&P. Not that they can't do anything in between meetings if they really would judge it to do. But in between meetings, they rather will come in the markets if they judge necessary to do just interventions or slowing down any moves. Okay, so but it for the time being it held very well, so that's a very good level to hold, and I think we can gradually move back up to levels around 89. Why not, go and have a look at 89 and a half if there's enough speculation ahead of the S&B. S&B meeting, by the way, is on, where is it? On the 12th. So it's one of the first ones to get their results in. So next week we will know from the S&B. There's a few others that I'm looking and sporadically trading as well. You look at this Euro Aussie, I was already saying like the 162 and a half, every attempt that we had into a month and to get above saw sellers. So this is a 162 and a half is a bit of a level to watch. Above there, up to 163 as well on the Euro Aussie, that is. If we look at both Euro Aussie and Euro Kiwi, they are both a bit in a downsloping channel trend, if you may want to call it that way. And it does look, we may see for as long as equity markets, for instance, risk markets are not behaving too badly, where we could see a bit of a move continue of a slide lower. And the other one, which I'm carrying right now, is Euro Kiwi. You see, you got a bit of a similar picture. Here as well, what I said last week, keep an eye on 179.30. It has kept, okay? So it has kept again. And this one is now starting seemingly to move a bit lower as well. I think combined to my aversion towards the euro still right now, there may be a case for it going to get into the low 77s, 176s perhaps on the Euro Kiwi. What else I wanted to have a look at, and this is a more longer term view, okay? But last well, a couple of weeks ago actually, I was trying to buy euro sterling. I was trying to look at the sterling in a bit of a more negative light, but I'm forced to admit that with the euro sterling break lower, I didn't feel like it. I didn't keep my euro sterling, and people know that I went out of it. And indeed, euro sterling came back down below 83, the figure. This sterling is still one that I'm going to look probably for the other side. If we get into the central bank meetings, potentially a higher dollar, if we would get it, this would be one that I'm going to look at the other side. I think there's enough there still in sterling uncertainty about the Bank of England. Of course, if the Bank of England comes out all panicky, cable will trade lower. But that may give us an entry to get long for year end or so. So I'm actually not interested in doing much right now. But I would say that if we get closer anywhere to 125, I'm going to get very interested in perhaps countering this one. This is what I wanted to say about the sterling, but it's more like I'm keeping an eye on it for more like not really the intraday trading, but the more longer term trading. And then keeping an eye on the metals as we usually do. Gold, it is in the zone again, and it's moving higher again. Look, I didn't have this level before, but then forces to admit that we are starting to see support every time we get into the 2620s. I was thinking like, okay, dollar a bit stronger. Zelensky maybe inclined to go and sit around a very wonky table, perhaps. We may see a bit of a drift lower down to 2607, but we are already beating the 2620s and we are already moving higher again. I'm starting to find this box a little fragile now. We're still seeing sometimes showing it up, but it is not really holding back a lot more. So I'm rather going to look at what's happening around 26 and a half, and then especially up in the 2660s. If we get above there again, it's going to go higher. Main support is somewhere going to be one here is for sure around 2607 again, and but a bigger one here as well around 2590. I think if we start to get below there, then we need to be very careful because we could be on our way for breaking a bit lower. In the meantime, it's holding here. So for those who are long, it's still a pretty decent hold, even and in general terms as well, right? We're still consolidating at pretty high levels. So imagine that we're going for a test, but we're holding this zone again. It's still going to be extremely bullish. Again, this one, if you look at it from a bit longer term perspective, watch out what can happen towards the end of the year, especially if we don't get anything specific from war sites. Okay, silver as well, holding pretty well. That box still seems to be doing its job, and it's still holding. We had two attempts in November. We are now December. We're holding. I'd love to see this trend line here, where I'm going to be much more interested. But I think it may be possible that we see already support here and that we move higher again. So those are the levels that I'm watching in both gold and silver. And that for me closes my votes for today, Ryan.
Thank you very much, mate. Good to see your stuff as always. And that's kicked us off for the week. So have a great week, everybody. Trade safe. It's going to be quite a big one. So make sure you know you're up to speed on everything and keep coming and watching us here at the Flow Show. Have a great trading week, everybody. We'll see you all tomorrow.